Good afternoon. It is Monday, September 16th, 2024. It's just after noon on the East Coast, and this is Robert Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital on YouTube. Before we get started today, I want to remind everybody that Metals Investor Forum is this weekend in Vancouver, Friday and Saturday. I'll also be holding an X space with Eric Coffin tomorrow at noon Eastern. You see that on my X timeline. So last week I was traveling to Arizona, and then I went to Colorado for the Beaver Creek Precious Metals Summit. And I feel like I need to get back into the swing of things. Definitely takes me out of my routine, traveling so much and being at 8,000 feet altitude and having 30 back-to-back meetings. But here I am, so let's just dive into it. This is going to be a little different. This is going to be a shorter video, and then I'll have a premium subscriber-only video about the companies I met with at Beaver Creek and some of my takeaways from that conference. So this is more just about the move we've seen in precious metals in the last several days. It's been pretty powerful. Gold was $25.40 Thursday morning, so just a few days ago, and it traded up $26.16 just a few hours ago. We're at $26.0860 right now on the most active futures contract, and this is a pretty healthy consolidation that we're seeing in gold here after such a powerful move higher on Thursday and Friday. So this is a bullish consolidation north of 2,600 an ounce. Suddenly everybody agrees that the Fed is going to cut 50 basis points on Wednesday afternoon. That's something I've been calling for several weeks, and actually if you look back on my Substack, you can see that I wrote about this on Friday and on Wednesday. In fact, on Wednesday, I was saying that the odds were favoring 25 basis points because we hadn't had that Bill Dudley, article where he's calling for 50 basis points yet. So the Fed funds futures were still calling for 25 last Wednesday. And I wrote this saying that, I thought 25 was going to be a policy error, and they'll find themselves cutting by 50 in the final, at each of the final two Fed meetings of 2024. So now we seem like we have a little bit of a pivot here. Something happened on Thursday, and I think it has a lot to do with just the inflation data is showing that there's a downside overshoot in inflation. I don't know if the Fed looks at trueflation, but trueflation, so this is the real-time U.S. CPI, about 1%. So there is a potential downside overshoot in inflation happening, and just frankly, inflation is no longer the Fed's paramount concern. It's now employment, and there's a lot of evidence, including all the revisions to non-farm payrolls, they're all to the downside, that the labor market is weakening, and it's going to weaken further over the next several months. I mean, monetary policy has long and variable lags, and we've been at 5.5 for quite a while now. So monetary policy has been tight, and it hasn't even fully made its way through the economy, and it will continue to make its way through the economy even if the Fed cuts 0.5% on Wednesday. And you can see the manufacturing PMI is in recession territory. It's been in recession territory for pretty much all of 2024, and non-farm payrolls have a pretty high positive correlation with this metric. So I think, and this where's the mortgage application here? Mortgage purchase applications. Jeez. 1 million. 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 Yeah, I mean, housing affordability is through the floor. Like people cannot afford housing, right? And I'm gonna in my MIF presentation, I'm gonna talk about rents and the stabilization, and actually the rents actually dropping in certain parts of the country. So inflation is not the concern. 3-month, annualized rate of core CPI is 2.1%. So Fed's at target. Some people are gonna try to time a top or call a top here in gold or silver. Just the fact is, this is a very bullish chart. This is one of the most bullish chart structures you could possibly have, where steady uptrend with regular lengthy consolidations like the one we just had in the last several weeks, and now we're breaking out from that. So there's no reason to overthink this breakout. Silver weekly chart, powerful breakout. We back tested the previous breakout level near 26. Support held above 50-week moving average, and here we go again, right? Like Forest Index turning up again. Relative strength is at 60 on the weekly, so sweet spot, breakout territory. I mean, it's a beautiful thing. It's a beautiful thing. And, this is a little bit of a preview of my Metals Investor Forum presentation, but the last two really big moves in gold, 2007 to 2011, 2019, 2020. Well, what do those two moves have in common? Well, the momentum structure, which is the relative strength index on the 10-year Treasury yield, when it broke down, when the 10-year broke its bullish structure, okay, the 10-year yield broke down in 2007 when the RSI 14 on the monthly broke under 50. Well, you can see what happened to the 10-year yield. It went into a bear market in yields, a bull market in Treasury bonds, and a bull market in gold. All right, 700 to over 1900 over the next 4 years. Once this really broke down under RSI 50. 2018. Gold bottomed in August, just under $1,200 an ounce. And over the next 2 years, it went up more than $800 an ounce to 2,080 by August 2020. And you can see the momentum structure of the 10-year yield broke down in late 2018, early 2019. All right, and here we are again. We're about to break down under 50. We're at 48. And you can see this is a topping pattern in yields, topping pattern in yields, topping pattern in yields. So, I mean, a sample size of 2 is not enough to make a strong forecast of the future, but there's a lot of evidence adding up here that we are in a precious metals bull market. And I talked a little bit about that in a tweet I posted on X on Sunday, like what could the target be? Well, my near-term target is a little over 2,700. We've already had a big move, so we can't be too greedy here in the near term. But longer term, I think 3,000 is a reasonable target in 2025. And gold miners, we're up here at the highs. We're having a little bit of a down day, a little bit of a breather, and actually it's normal and actually very healthy ahead of a Fed meeting for there to be sideways action for a couple days. So totally happy to see quiet trading Monday, Tuesday, and even Wednesday morning. And then, let's see what the Fed brings. But again, I don't see any evidence of a major top in place yet. From a sentiment standpoint, yeah, on CNBC, they do have this Bank of America Pro article saying $3,000 gold, but that doesn't mean much. It's certainly not a front and center headline on CNBC or any other financial site. Little preview there of my Beaver Creek video. But yeah. So anyway, if you want to get my premium insights from a week in Colorado, sign up. It's $8 a month on my Substack. Don't be a cheapskate. Anyway, thank you for tuning in. And if you enjoyed this video, if you get value from my content, please hit the like button and subscribe. Goldfinger Capital. Thank you. Have a powerful week.